What defines success?
I didn't know where to go or how to do it, so I literally went into every building on Wall Street and took the elevator to the top floor and walked down and asked every receptionist if there were any jobs available.
What happens when you get knocked down?
It was not fun to be in this business during the last bubble, and that was a time when it would make you reconsider. It was tough. It was no fun.
What makes some people radiate?
Paying meticulous attention to detail and not thinking anything is too small, that it's not worth attention.
This is Radiate.
Hi, everyone, and welcome to Radiate, the show where we interview some of the world's most successful people to find out how they worked their way to the top. This week, Alan Patricof, one of the early pioneers of the venture capital and private equity industries. He founded Apax Partners in 1977 and has been involved in the development of several major companies like America Online, Office Depot, Apple Computer, and he also served as founder and chairman of the board for New York Magazine. In this conversation, he shares his life experience in the venture capital world and some extremely useful advice for budding entrepreneurs like you. So here we go with the original venture capitalist, Alan Patricof. Enjoy. Alan, so good to have you on Radiate. And this is by the way, our first video podcast. So excited.
I'm excited.
Actually, you were requested, some of our listeners, we had put out the survey that said, who would you like to hear from? Whose career would you like to hear about? And your name was on top of the list. So our listeners...
On the top? That's pretty impressive.
Yes. Listeners, they wanted to know more about your career. So let's start off with this. If you could describe your career, in a few sentences, how would you describe it?
I guess I would say I made the right moves at the right time, and I was at the right desks. By that I mean, when I got my first job, it was total luck. It's hard to believe, but the way you got a job in 1955, before you were born, is that there were no headhunters, there were no recruiters. I went to Ohio State. No one was came out to Ohio State to find some aspiring young man.
Right.
I had been offered a job at National Bank of Detroit and Caterpillar Tractor, and decided instead to come back in New York and try to get in the investment business. And I didn't know where to go or how to do it. So what I did is literally went into every building on Wall Street and walked from building to building and took the elevator to the top floor and walked down through the back stairways and asked every receptionist if there were any jobs available.
So you literally pounded the pavement then?
Exactly. It's the only way I knew how to do it. There was no other way. And I was lucky. I can't remember what building it was, but the building I did get a job in was at the top floor. So for that building, I didn't have to go the whole way.
All right. So you were lucky in that respect.
Yeah.
And you were lucky in many respects. I mean, one of the things that I find so remarkable about your career is that, like you said, you were in the right place at the right time in many aspects. But like very early on, you kind of got this sense, right, that building companies was going to be a big thing, and that this venture world, right, this world of venture investing was going to be big. I mean, you're considered one of the key people who's built this whole venture capital world.
Yeah, but that's true to some degree, I guess. But you're missing a little bit of space because I started out in 1955, and I started in the venture world full-time in 1970, although I backed my first private company in 1964 while I was doing something else. But
What company was that?
It was a company called Datascope Corporation, which was in the medical electronics business. And
so actually, you're saying I'm missing 20 years here about
15.
Okay.
15. And the fact is that where I meant the right desk at the right time is that I worked for my first job. And remember, I went to Ohio State, and I had no specific background. I didn't go to business school, and I got hired by a very, very well-groomed Yalie from Greenwich, Connecticut. And it was very unlikely that he would have hired a young bachelor from Ohio State. And it was the right place to be. It was an amazing investment counseling firm. And then I got hired by an amazing man, a Frenchman, who ran a development capital firm, which was the first inkling of venture. It was called development capital, but it was building grand projects around the world. And then I got hired to run a family's money, not my family.
Right.
Definitely
Not at the time.
Definitely not my family. And I managed them for many years. And then eventually, while I was there, that was when I started a couple of companies with their money, making some investments. And that's what got me triggered into saying, this is an interesting area. It was much more exciting to be involved with private companies that you could identify with, feel some sense of authorship, as opposed to buying and selling International Paper and IBM and General Motors, where there was kind of an anonymous type of activity. And that's what got me to eventually do this in 1970.
Well, what is it like when you're building a company? What does it feel like?
Well, I don't think we can take credit for building companies. I mean, entrepreneurs build companies. Maybe we're the entrepreneur's entrepreneur. We back entrepreneurs, and our job is to stay out of the way, pick the right people.
But let's say New York Magazine, though.
Yes.
I mean, you basically founded the magazine, right?
I did that in 1966.
Right.
Before I had started what was then Alan Patricof Associates in 1970. And that was one of the 2 or 3 investments I made with the family whose money I was managing, with their money, and as a private investment. I became chairman of the board, and I helped shape that business. But the editor was the key person who subsequently died, but he had the vision and put the team together. And
you wanted to support that.
Yes, and I think that's what the best thing a venture capitalist can do. Actually, I say this today, currently, what I believe our major function as a firm today is helping young companies get access to people who can give them business, because that's the hardest thing for a young company, is to get to see the right people who can actually use their service or their product.
Well, your network is so wide, right? I mean, that's partly what they're tapping into.
That's part of it, and of the people I have with me. But venture capital, very often people say the value added. They claim this quote: "We're a value added firm," or a value added approach, which means helping them get bank loans or helping them hire people, all of which are important, or some being on the audit committee, the compensation committee, organizing, getting lawyers, accountants.
Yes.
I feel the most important thing we can do is get them in to see someone who can possibly give them business.
Why do you like doing this?
It's very exciting to get up every day, and I've said this publicly in TV and in print, that the elevator door opens every day, many times, and you never know when someone really exciting and brilliant is going to walk through that, and that's the nature of the venture capital business. It starts every day with new people. I have to say, not many people who come through that door are exciting, because the ratio of companies we make investments in compared to the ones that come in is a very small fraction.
Well, what would you say? What is it, like out of 100?
I'd say probably we invest in maybe a little between 1 and 2 out of 100.
Wow.
Right now we're seeing in New York something like 75 to 80 new deals a week, and in our Los Angeles office of Graycroft, we see probably 30 to 40 a week. So that's and we're just one firm.
And you're just one firm,
yeah,
exactly.
Yeah, and we work a lot. We're a very transparent firm. We're very open, and so we share a lot with other firms. And what amazes me is when we share with some of these other firms what their flow is, the duplication is so small. So
it's not the same company.
Not the same company.
Going to each firm.
Yep. It's just.
What does that tell you, though? I mean, the fact that there's so many entrepreneurs out there, by the way, most of whom will not make it.
Not by the way. The fact is they won't make it.
Right.
It's not even. It's
not even asterisk.
We're going through we were going through an entrepreneurial heat wave, or whatever you want to call it. But I've never seen anything like this. And
is that good or bad?
I guess it's both. It's good in that it's channeled a lot of people who don't have in their mind exactly what they want to do, so it's encouraged their creative juices. It's bad in the sense that there's going to be a very high failure rate, not just that we do 1 or 2 out of 100, but out of that 100, 20 or 30 may get financed by somebody out there.
Yeah.
And the ratio of companies that can get subsequent financing is small. There just isn't enough money around to take care of all these startups. When you think of the workspaces that are being created, shared spaces, which are happening all over the country. I mean, in New York, there must be 20, 30, 40 shared work. We have some built entire buildings where the floor is just 100 desks of people starting companies. There just isn't enough money to finance them in subsequent rounds, and maybe they get the first angel.
Right. But they have to prove something before they can raise money again, right?
Exactly.
And a lot of them don't.
That's the shortcoming. We're going to find out. And I thought it would have happened a little sooner, but the longer this wave of startups goes on, the more they're going to be around that are not going to be able to get follow-on financing.
So let's move a little bit away from talking about the industry, because you talk about that all the time. Let's talk about you. Okay, so part of the conversations we've been having with people on this podcast is we want to talk about people's careers and their ups and downs. So have you had any downs in your career?
Well, I'd say my downs have been mostly in making bad investments or turning down good investments that I should have invested in.
Like what?
Starbucks was probably my greatest error, and that I understand why I made the mistake, and I try not to do it again, but it's very hard.
Why did you turn down Starbucks?
I was very parochial. I lived in New York City. And this was when I had Alan Patricof Associates, which became Apax.
Right.
It was during, I'm not sure, I think we were still called Alan Patricof Associates. And it came out of an office we had in the Silicon Valley at the time. And it was someone who was a decathlon runner, swimmer, whatever, from Seattle who worked for us, who was a kind of thinky, touchy, feely, into Esalen. And he came up with this new coffee shop that was being developed in Seattle. And I said, are you crazy? I mean, we've got coffee shops in New York. We got 2 on every single block. They're just called luncheonettes or coffee shops.
Right.
What in the world do we need another
Why
coffee
do we need
shop?
another one?
Yeah. And I think I know I didn't understand the culture and what Starbucks was really about. It wasn't a coffee shop. It was really a way of life. And,
it's a culture.
Yeah.
Right.
And I didn't get it. And a lot of things we suffer from is thinking that since we have it in New York or it won't work in New York, that it won't work some other place. And that's a discipline we keep trying to improve.
So how do you try to get out of it?
Just try to be conscious of it. And now you can't get out of it. Just make sure the next thing comes along and you don't think it's in New York. Make sure
you try to do more research.
Think about the other place it may have started or where it is succeeding. I think Starbucks had 2 or 3, maybe a half dozen stores at the time.
Right.
Now we were the original investors in Office Depot, which at that time was a new trend in wholesale office supplies, and it was being started in Florida. But somehow we caught that. Maybe there weren't office stores on every block, so
right.
it seemed like
that
a
was
good
a
way to
foreign
go.
Concept in New York City.
Yeah, it seemed to be conscious, and it worked out very well for the time we were involved, certainly.
So for you, your mistakes are more investing mistakes then, like that you didn't catch that trend or the new innovation. So you really.
Well, I'll go back a second. There was a period of time when it's investing again. We had a fairly large emphasis in biotechnology in the early 80s, and like a lot of other people, but that's an investing era again.
Right.
But, very capital intensive, very long lead time business. Now, look how waves go. Right now, in the last year or two, biotech has probably been the hottest area you could possibly be in.
So you were early.
Yeah,
You're a few decades early.
Yeah, and it conditioned my thinking and our thinking so that we didn't want to be back in biotech again.
Right.
So we missed this cycle. The cycle finally worked out. But think about it. From 1980 to 2015 is a long time.
Right. No, that is. I guess if you stuck with it, you would have eventually gotten
You'd be dead,
paid out.
frankly. You couldn't have afforded all the losses that took place during that time.
So you really can't think, though, Alan, of like low moments in your career, like what, like how?
Well, if I'll reach for a career, listen, I've been lucky, and I work hard, but I've been lucky. But I can say that one of probably my most depressing moments was when I was raising my first institutional fund. and I had raised, I think it was $25 million, which was all the money I couldn't imagine. I'd never seen anything like that. My first fund was $2.5 million. And we had an investment commitment from a name no one's probably heard of today, Saucony Mobile, then became Mobil, which then became Exxon.
Wow.
So I had a commitment of, I can't remember,
Why did
$3.5
they
million.
invest? That's interesting.
Lots of companies, and the pension
Okay.
fund, the pension fund.
Oh, okay.
Yeah, and they had invested. And 2 days before we were closing, the man who had committed it decided to change his mind, which is something you don't do very often. It's not. It's just not done in commitments. A commitment by someone saying I'm in something
Is a commitment.
Yeah, it's a commitment. It's not, you don't write it down and sign your name.
Right.
And I panicked at the time because without it would have brought us under a minimum amount in which we couldn't close, in which case everything would have gone to hell, and we would have had a lot of people that we had employed who wouldn't have had a job, and it was a very tenuous moment. And I reached out. I think of who did I know on the board of Mobil at the time, which was a public company, and I finally found Alan Greenspan, who I was at those days was a friend of. I haven't seen him in many years, and I called him up and asked was there anything he could possibly do, and they resurrected enough of the commitment to get us over the minimum $20 million hurdle. But those 3 days were pretty awful days, and I'm sure other people have gone through those.
Well, I hear that from entrepreneurs. I hear that from venture capital.
Yeah, exactly. It's never closed till it's closed.
Exactly. It's never closed until the money's in the bank.
That's exactly it.
Right.
Yeah, exactly.
When we continue, Alan on the importance of quick no's and what advice he would give to anyone who wants to succeed in business. This episode of Radiate is brought to you by Freshbooks. If you're an entrepreneur or you have a business on the side, you need to know about Freshbooks. Freshbooks is a simple invoicing solution that lets you create and send professional-looking invoices in seconds. They've created something so intuitive that Freshbooks has transformed all those annoying, time-sucking duties that entrepreneurs hate. They turn it into the easiest part of your day. Now, on top of making your business run smoothly, Freshbooks makes things easier for your clients by giving them the ability to pay you online, so no more chasing down checks or running to the bank to deposit your checks. And if your business keeps you constantly on the move, don't worry. The FreshBooks mobile app can keep up. Just use the camera on your phone to capture your receipts, and while you watch, FreshBooks magically creates your expense reports right in front of you. All this, and FreshBooks is offering a free 30-day trial to Radiate listeners only. So head over to freshbooks.com/radiate, enter Radiate in the How Did You Hear About Us section. That's freshbooks.com/radiate. This episode of Radiate is also brought to you by GoToMeeting. Think about all the time, money, and hassle it takes to hold a meeting. You can do something else. You can meet your clients and coworkers online with GoToMeeting. It's a smarter way to meet. GoToMeeting makes it easy to meet with your team whenever you need to, wherever you need to, because with GoToMeeting, you can meet from any computer, tablet, or smartphone, no travel expenses, and no hassles with traffic. Your team can join by clicking on a link, no signups, no speed bumps. You just turn on your webcam, and it's HD quality. It's like being in a room with your teammates. With GoToMeeting, everyone sees what you're seeing, so your whole entire team can get on the same page and get going. So head to GoToMeeting today, try it for free for 30 days, nothing to lose. Visit gotomeeting.com and click the Try It Free button. Do it now and have your first meeting up and running in minutes. That's gotomeeting.com for your free 30-day trial. Things I've known about you, I've known you for many, many years, mostly in a business sense, right, when you come on our show. But, I do know people around you, who you're an eternal optimist, right, and you have to be in this business. But you're also very direct, and, like you tell people, like it is.
It's funny you should ask this because I don't write that much, but in the last year I've written a couple of things, and I'm writing something right now, which the title of which I haven't figured out how I'm going to do it, but the title of it is, quote, "You don't remember me, but," unquote. And when you've been around this business as long as I have, every week, in fact, sometimes multiple times a week, someone will come up to me who I have no idea who it is, and they always starts the same way. You don't remember me, but. And that has made me think a lot about just what you're talking about, of how you deal with people on the way in your career. There's a subtlety, particularly in a business like ours, of spending so much time turning down those other 98 people.
Yes.
That how you turn it down, and how you handle people, and how you answer their emails, and how you answer their letters, and how you answer their telephone calls. People don't forget, I will guarantee you. You don't remember me, but in 1972, I brought, believe me.
X deal to you.
Yep. Or you interviewed me for a job, and now he's president of a company someplace. And I may have turned him down. I probably turned him down.
So how do you turn down? How do you turn down pitches, and how do you turn down people?
Oh, you can't. I mean, it's not like there's a secret. I think it's a style of how you try. You try hard. No one can be perfect. But as I say, every time someone says that to me, my heart pounds, because you don't know what they're going to say. Because they very could say, you don't remember me, but I brought this and you screwed me on something. I mean, that's what you don't know.
Right.
And I'm sure that this video, this conversation, if I ever write this thing, it will evoke somebody out there who's going to get even, who's going to get me. But so far, I'm doing pretty well. And I obviously, like, for example, I return every phone call within 24 hours and probably the same day.
Okay.
I try to write notes to people. You try to do something.
Well, and let's say when you know you're not going to.
You give a reason for turning things down.
Well, I was going to say, I think one of the most painful things that entrepreneurs have told me is that it's really painful not to just get rejected, but to get rejected with a really long no, right? The slow no is extremely painful.
The next best thing to yes is a very quick no.
Right, exactly, right? And is that what you try to do?
I say that many, many times. And so saying no is
So you try to do that right away?
Yeah, and also I keep telling everybody in my office, anybody in this business, when someone brings a deal to you, you've got to keep remembering, you say, how can anyone do something? This is so crazy. Or there are 25 other people like this, or something you're thinking that's so, you got to remember that to this person, that is the most important thing in the whole world. They're not there as a joke. They're not there just to say, I'm going to take a rocket ship to the moon. If they say they're going to take a rocket ship to the moon, they really believe they are. And it's really, they take it very seriously. And if you treat them like they're crazy or they're stupid, it's no different than you said something bad about their natural son or daughter. It's exactly the same. You've insulted their baby, and be careful. So if you keep reminding yourself of that, it helps you. And sometimes you forget, but you got to try hard.
What makes you want to invest? Like when you hear someone pitch to you, like what makes you want to invest?
Well, I think first and foremost, it's always the people. I mean, I'm sure you've heard it 100 times, but it's true. I mean,
I have, yeah.
And how someone projects, and how I do think there's a certain value in someone who can convey their message clearly and can motivate not only fellow employees or partners, but also their investors. And I mean, we've learned that one of the best indicators of not always, but a very good indicator is when someone's starting something or building something, and they attract, and they're doing something in an area similar to what they did before, and that they attract people who worked with them before. That is a good indicator.
Sign.
It's a very good indicator, as opposed to someone who comes in who's in a new area and hiring people from all different parts of the world and assembling them. That risk profile is very, very high. But I can't say you always are successful, but remember, the people who are joining him, that's the most important thing.
Yeah.
The people who are joining him work with them before, say, this person is a leader, I'm willing to put my trolley car on behind them, and I'm not gonna vote with my money. I'm voting with my career.
Yeah.
I'm willing to take a chance on this person. So that's a good, interesting indicator.
That is actually, and I hear that all the time, that the people above all, the people, not only the person who's running this company, but the person being able to attract other people, like that is extremely important when you talk about building a successful business. So it seems like you've got everything. Why do you continue to work, Alan? I mean, why not just enjoy the riches of your labor?
I never even considered it, frankly. When I left Apax and gave it to the partners, they wanted to run a retirement party. I said, "You're crazy. I mean, I'm not retiring. I just am going to the next chapter."
How old were you at the time?
I started in 2006, is 10 years ago.
Okay.
So I was 71, which was
So you were
pretty
71
late.
at the time?
Yeah. And
You're 81?
Yeah.
You do not look 81.
I hope I don't expect. I'm going to live another 25 years, so I hope you can say that again in 10 years.
What is your secret? Seriously.
I
You
don't
really
know.
do not look
Exercise,
81.
going to work every day early in the morning, staying late, and getting excited by opportunities and having a positive attitude, just like you said before.
So you knew you were never going to retire. Were you one of these people
No,
you just knew you never were going to?
No, I didn't. Honest, that would not be fair. I knew I would stay as long as I was excited by the business. I mean, I have to say, in the late 80s and early 90s, late 90s and early 2000s, it was not fun to be in this business during the last bubble. And that was a time when it would make you reconsider whether, what we were going through really, it was tough. It was no fun. And this time, I think there's a lot more rationality in the business, and I don't think we're going to see.
But if we went through something like that, though, would you leave? Would you say, forget it, I'm done?
I don't know. I haven't even thought about it at the moment. I don't foresee it in the near future. As long as we stay disciplined to what we're doing, and I'm fairly optimistic that we've had a pretty good record for the last 10 years, and I think we'll have a good record going forward. And I left behind the firm Apax, which has done, I'd say, remarkably well without me even.
Which is actually a good sign.
Yeah.
Right?
Yeah.
I mean, it is.
Good transition. And in Greycraft, I've brought in 2 partners early on as co-founders, and now added 2 other partners, and then we just made a new woman, another second woman partner. So we're ahead of the curve on that. I've always had women partners. I was probably the first person to bring a woman into this business.
So before we go, Alan, other entrepreneurs or other people who are coming up in this world, right? And they look at you and they look at what a great career that you've created for yourself. What are some of the key pieces of advice? And this is where I always tell people, like, let's forget the follow your passion, work hard. Like, I really want to hear something really concrete that listeners can take away. Like, what are like some of the key pieces of advice that really helped you along the way, or that you would give someone to really be successful?
One thing that I find is endemic in business and in the venture capital industry is paying meticulous attention to detail and not thinking anything is too small that it's not worth attention. I'll give you as an example. I try to do transactions and attach warrants. Warrants have no value at the time, but if you have value, if you had warrants in a lot of companies we've seen, they would have enormous value down the road. It's a small thing. It's hard to get people to pay attention to fight for those things, but it has a long-term impact. But running your business, not being casual about how you spend money, not being casual about the economics, and building models and understanding what it takes to make a profit in a business. And I don't think there are enough, particularly young people today starting businesses, who've thought out deeply enough. Can I ever make money in this business? A lot of people are finding out now. They started a lot of businesses that they just
can't make money.
They can't make. There isn't enough gross margin to ever have a bottom line profit, and they never went deeply enough into understanding their cost structure and the details involved in running the business that would produce an ultimate return that would justify the kind of expectations they have.
Right.
So I think being meticulous about and working hard. I think that nothing substitutes for working hard.
And how do you work hard? I mean, when you say work hard, like, how did you work hard?
Well, I mean, from a time standpoint, I certainly work hard. I come in very early and stay very late.
Like what? Like 5 in the morning, 6 in the
No,
morning?
I get in. It depends whether I work out or not during the day, but I'm usually in by 7 in the morning.
Okay.
If I have an early morning breakfast, I may not get in till somewhat later, but I've started earlier anyhow.
But let's say before when you were building your firm, like would you
Always the same.
were you working like 12-hour, 14-hour days?
Yeah,
Okay.
and you work Saturdays and Sundays because venture business is a full time. It doesn't stop. But I think that paying meticulous attention to the business. Everyone knows who works with me that I am on top of, to the maximum extent possible, every company we've got in the portfolio. And they never know when I'm all of a sudden going to send a note and say, I just saw that so-and-so did this or that. I don't treat things casually in business. I take it very seriously. I don't think anything's a laughing matter. I mean, it's something to be very serious about how someone did this month or last month, or what their projections are, how much cash they have left to stay alive.
Right.
Those are the kind of
people don't think you're paying attention to that.
I pay attention.
And you are.
Very no, not that they don't think. They know I'm paying attention to it.
Right.
But I think that's kind of characteristics I think that make for success in running your own business and in running a venture business. I mean, in running a business, people lose sight of the fact that cash flow is king. In fact, net free cash flow is the defining word, because what happened in the late 90s and early 2000s was all of these businesses were financed with investor capital. And it finally got to be a day when the emperor had no clothes on.
Yes.
And someone recognized it, and they had been doing round 1, round 2, round 3, round 4, and all of a sudden someone woke up and said, where's the beef? Where's the profit going to be? And that there's a danger in this business with a lot of money around. People keep funding companies and don't know when to stop. And I think that people who run businesses, younger businesses, have to really be disciplined around thinking all the time about at some point I have to stop needing investor money to stay alive.
Right, and I've got to start making money.
Yeah.
Thank you so much for joining us for the first season of Radiate. We'll be back in just a few weeks with a whole new lineup of the world's most successful people to share their stories and insights with you. Keep an eye out for some special episodes before that. And in the meantime, please take a few moments to review us on iTunes and subscribe to the podcast. Stay up to date with me on Twitter, Facebook, LinkedIn, and Instagram. And don't forget to sign up to my newsletter on my website, betty-liu.com. See you soon on Radiate.